Guys, Michael Everett here with True Trading Group. With this video, we're going to go over a swing trade setup and alert in AMPE that we have been watching for several days now. We've been watching this AMPE setup on a bullish wedge pattern on the daily chart. It also has a golden cross setup and formation in this AMPE that we are long from $1.17. Right now printing after market at $1.26, so up just under 8% on the trade already, but I expect a little bit more out of this trade, and let's get right to it. Here's the daily chart, guys. Here's your daily setup on this AMPE, and what we were looking at was this bullish wedge pattern that you see form. Here's the bullish wedge in AMPE, okay? You can see all of these tails, how the stock, every time the stock touches that line, see how it sells all the way down away from this resistance area. Today, first day, the stock has closed up near that resistance. This is a close all the way up here on very strong volume. Okay, when we were talking about this trade initially, last week, we were talking about volume. I said we need volume to trigger this trade, and we got that volume today in AMPE, and we jumped in at $1.17. Let me take it to the intro. Well, let me delete these lines here first. Take it to the intraday. I'll show you my exact entry. Okay, my exact entry on this stock was right here at $1.17. Okay, once I saw this volume surge come in here, when the stock broke above this 116, went up to make a test, actually made a new high of the day at 121, got long at $1.17, and now you see the stock push into the close on some real nice volume, and printed $1.26 after close. Right now it's $1.25 by $1.26, and we're going to look to see if this stock can give us some extension tomorrow. Now, let's go back to the daily. Let me show you what I want to see. What I want to see happen is one of two things. Ideally, perfect scenario is we see the stock extend tomorrow. You want to see the stock extend up and out of this wedge. This is what you want to see the stock do tomorrow. That's what you want to see. You do not want to see the stock pull and fall back inside this wedge. If the stock falls back inside this wedge, that'll be a bearish signal, and you're going to need to readjust your game plan. Okay? So that we want to see, perfect ideal case scenario is see the stock get through like 130 tomorrow and give us a nice strong follow through day that shows us confirmation the stock is broken out of this wedge pattern. If the stock does this, that's a bearish signal. You do not want to see the stock fall back inside this pattern. It's just like a bull flag, guys. When you see a stock break out of the consolidation, you want to see it hold that break and continue. You do not want to see the stock break and then pull all the way back in to retest the pattern or retest support. That's a bearish signal. It actually happened in a previous trade that I made this morning that I took a 3% loss on that I'm going to get to in a minute to show you exactly what I'm talking about when a stock fails its breakout and then pulls back in to retest the support that you bought in front of. That's a bearish signal. So this is what you do not want to see in AMPE. If you see this tomorrow in AMPE, it's a bearish signal and we need to readjust the game plan. But if you see that first candle and the stock does that, a nice green candle, then the game plan remains the same, and we look for that continuation swing trade move in this AMPE as it goes, and maybe gives us a move up to around the $1.50 area. Okay, so that's what we're looking for in AMPE. Let me take it to SPCB today and show you what I mean about readjusting your game plan when a stock gives you a bearish signal, because I did it today in this stock and it saved me an extra 2.5%. This $4 was an area of resistance that we spoke about pre-market, sorry, not pre-market, in the morning, and it's because of this resistance area that you see right here at $4. So here's your resistance at $4 in SPCB. So let's go to the intraday chart. Intraday, the stock opens, pushes higher, pierces through $4, sells off, bounces back up to retest $4, and you can see once again that area was resistance for the stock. Stock pulls in, eventually breaks above $4. Right here, when the stock held above $4, right there, I got long. Okay, I got long this stock right here at $4.07. looking for $4 to hold support and looking for a break of a new high and a push higher. I got the break of the new high. This is actually a new high of the day. The previous high was 424. This high is 429. So the stock actually did what I was looking for. It broke, made a new high. But then look what happened. It pulled all the way back in to retest the support area that I bought in front of. That's a bearish signal. I originally had my stop loss set for this trade at $3.85 right here. Let me see if I can get it to the penny. This isn't cooperating. There we go. There was my stop loss. This line was my stop loss originally. Okay. Once the stock did this, that's a bearish signal that was not part of my original game plan. So when a stock does something different from the game plan that you went into the trade with, it means you need to now readjust your game plan. Okay? Once the stock showed me that bearish signal, and that is a bearish signal, guys, when a stock breaks the high of the day and then pulls all the way back in to retest the initial support level you bought in front of, that's a bearish signal. Now, if the stock, so here's was resistance, right? If the stock broke above and then held for 15 and retested that support and held, that's a bullish signal. But for it to pull all the way back to retest the initial support level that you bought in front of, bearish signal. Okay? Once the stock did that, I moved my stop loss from 385 up to 395 right here. Okay, so that became my new stop loss. Then once the stock broke down right there, I got stopped out, took a 3% loss. Okay, and it saved me from getting stopped out later down in here because this was a bearish signal. That was the stock telling me that it's not going to continue higher. This was a failed breakout, and I needed to adjust my game plan, and it saved me. Instead of losing 5.5%, I lost 3%. Very small loss, very manageable loss. If I lose 3% on all of my losing trades, I'll be the happiest trader alive because that's a very small, manageable loss, especially when you're pulling out 15 to 20% when you're right on your winners. Okay, and that's what really it's all about. So readjust your game plan, guys, if a stock gives you a signal that was not part of your original game plan. So SPCB gave me a bearish signal right here, and I readjusted my game plan, and it saved me an extra 2.5% in downside risk. Okay, and that's what controlling your downside is all about. So AMPE, guys, we're looking for a continuation move tomorrow. Once the stock gets up out of this wedge, you see this huge gap in here. Who knows where this stock can go, guys? And you've got this beautiful golden cross set up right here with the 50-day moving average crossing over the 200-day. Hopefully that gives us an extra little jolt as we look for follow through in AMPE. I'll see you guys tomorrow.